Hope you're all well. In this video, I will be showing you my weekly breakdown that I send out every single week into my Discord. This is essentially my plan for the week ahead. It does come with charts with all the information on it, so you can refer back to it. And if there are any trade developments throughout the week, it does get updated as well. The way I trade is a very simplified retail strategy which has a very refined way of execution. So because the tech in itself is very simple and very efficient, it reduces room for error. There's not many places you actually can go wrong. It's very black and white, very systematic, so you're not thinking much, so you can focus on yourself. So all the concepts are broken down in different videos, and I upload videos like this on my Discord throughout the week to keep you updated with the markets and apply the logic that I teach in the videos as well, and demonstrate it in front of you in live market conditions every single week. Hope you're all well. Let's have a look at the yen pairs. So we'll start off with GJ. So Monday, it's a tech driven market, so I would be interested in the 50 fib if there is a breach of the 38 50 fib plus break retest. This trade is only valid for Monday, plus it's also a 200 daily EMA break retest. It's only valid trade for Monday because it's a tech driven market, but after that we've got the big 38 plus also this level, the 50 plus break retest, and the 61, which is this level as well. Remember, recent price action is king, so I do favor these two levels because they're comprised of key levels. The middle one not so much, but the 38 is of interest. So if there is a breach of this area, if this area does not deliver, I will be interested in the 38. If not, then let's say if there's a pullback over here, then I'm only interested in the 38 with timing or alignment. But essentially 38 is a valid trade with the 50 as a backup. And if the 38 does deliver the move, so let me make this hack. So let's just say if 38 does deliver the move, then I will be interested in the 61 plus key level, where the 50 is only to be considered with timing or alignment, so something like that. And anything past here, it's not really worth planning just yet. For the time being, we will leave it because it's 500 pips away, so you never know, but we'll wait to see first if these are the lows. But essentially my plan, I mean I might as well just tell it you, is taking the bottom zone with timing or alignment. If there isn't, then I would simply wait for a breach to increase the appeal of this zone. If it does do the pullback over here and then it starts pushing higher, then I'll be interested in this zone, where I would want a breach of this one to increase the appeal of this one. This one's only valid with timing or alignment. The logic behind all of this is whenever I do, so it's the tech in itself, but whenever I am taking tech, I would want something on top of just tech to improve the odds in my favor. In terms of buys, it's simply this level. I'm not going to force anything else because I don't see anything else. There's not much over here, and if it does start pushing lower, I'm not going to force anything in over here. I'd rather just want a straight push into this zone. And if that is the case, this is a valid trade. If it does breach this zone, then maybe 190 could deliver something, because that is 250 pips away. If there's no reaction and it's breached this key level, it's worth giving this a go, because the next obvious level is down here, which is this one. So it does make sense giving the 190 a go, especially if there's timing or alignment. Now, in terms of EJ, it is on a very weak level, which you could have looked out for timing or alignment, but it's not strong enough for me to take this trade, especially because this was on the back of NFP, which caused risk off, but also money into safe havens, and that's why we saw yen pairs go down. So it's worth just looking at the zones after for potential timing or alignment. I don't actively trade EJ, so I'm not even going to make plans for this. Rather, it's just key levels and also the big 61, and yeah, they are just the zones. UJ, if we do start pushing higher on Monday, this is a valid trade because price would have had to push 150 pips towards the upside. Well, if that is the case, do keep an eye out on what the driver is. If price starts pushing lower, this is again another valid trade, but for me, I'll only be interested in this with timing or alignment. The reason I'm more comfortable taking this is if there is a breach, then there's a good chance this delivers, especially on Monday. But yeah, do keep an eye out on Dixie or maybe the other yen pairs depending on the driver. But if this doesn't deliver, then this is of interest. Again, remember, I do trade on, like if I'm trading the yen pairs, I'm not going to be trading all three. If they're all on sell levels, I'll pick the one that looks the best, and currently the GJ does look the best. When you do have zones like this on UJ, then you can pick them, but never go against a currency pair like multiple times at once. Hope you're all well. Let's have a look at metals. So we'll start off with gold. In terms of buys, the first buy that we do have is the 38 fib plus a 4-hour key level. There is also a 4-hour key level on the 50 fib and also the 61 fib. So how you would then play it is in an ideal case scenario, especially in terms of fibs. This is the play that I look for. It's a tech driven market, so if we do get the 38 while it's a tech market Monday, Tuesday, then I will be interested on the 38 because it's around 250 pips away. So ideally a sharp move into the zone to increase the appeal of profit taking. And then in that case, the 50 fib is a plus these 4-hour key levels is a backup trade. Now for this trade, you would have to cover 26.50. It's just retarded to have a stop loss over here, no matter what risk to reward you want. That like it's just not a smart choice to have a stop loss on these wicks, plus also 26.50 psychological level. And it would also increase its appeal if the 26.75 got breached on the way down. Like there's a good chance that it can make the move from the 26.50, so for that reason, like you will have to cover it. And yeah, so this is a backup, but if it does make the move from here, and then when we're coming down, this is no longer a trade that's worthy to take without alignment. So you would need alignment, maybe timing, but like this I would only take on timing if it was like bang on 4 o'clock, like nothing else. But if that isn't the case, then I would simply just want a breach to then increase the appeal of the 61 fib. Like it would be better if there's no pullback on the 26.50 if this is the case, because then you're no longer in this trade. Then you just simply want a breach of the 26.50 to increase the appeal of this one. There may be a scenario where, let's just say, price makes the move from here and then it comes straight down with alignment. It could make the move from the 26.50, but if this is the scenario, then this is how I'm going to play it, where I'm just taking the 61 fib. There is also a weekly break retest on the 38 fib as well, which makes this an appealing trade, especially in that tech driven market. Now let's have a look at silver for potential zones of alignment. So we've got the 38 fib plus this level over here, and if that does make the move, breach of 50 to then increase the appeal of 61. Now this isn't a pair that I trade, also these are just the zones for potential alignment. Now this is if it doesn't make a new high, and then after that we've just got these lows, and then past that maybe these wicks, but for now just these ones. In terms of sell case scenario, if price pushes higher, maybe this 61 plus break retest plus also the big 38. So I'll draw the big 38 from there, and the 61 is also on this key level, and you've also got a smaller 61 of this move. So far the 38, I think it did give a reaction. I mean, it did see a bit of drawdown, but 50 did give a reaction. So 61 plus 38 plus break retest, it's a pretty decent trade, worth a shot. Now we might potentially have the third touch if we do see a push Monday, Tuesday. And then for gold, by the way, I forgot to cover the sell case scenario. It is simply just this high. I don't have anything else before that. I'm not going to force anything. Maybe if there is alignment with silver, it could go off these wicks, but for the time being, I'd want a breach to take this, but I will be mindful. If there is alignment, then it would be stupid not to take it, especially if you're behind the charts. But yeah, in terms of sell case, after that is this break retest. So if there's no reaction over here, it will increase the appeal of this break retest. But if there is a reaction after 61, then it's not the best, but it's still a level to be considered. And then you've got these highs. So these are the zones for Dixie. They have been working pretty well recently. We've had this zone which has delivered the move down, and then this level which delivered the move back towards the highs. Now I could have considered the 110, but with NFP I just played it a bit safe. But 111 is definitely a zone worth taking. These highs and then them two highs, and in terms of buys, potentially this could give insight into a buy, but I do doubt it. I would want a breach to increase the appeal of this one, then this key level. Well, let's have a look at the economic calendar for the week ahead. So my main focus is on the dollar and trying to understand the dollar narrative and perception, and there is some pound news as well, which I am going to obviously be on the lookout for, but I'm not really gonna try understand it too much or let it confuse me. More so just be playing a bit defensive around that. So yeah, I'm not gonna look too deep into that. But in terms of the dollar and also yen's relatively quiet, so it's more so focus is on the dollar, because if the dollar gets stronger and the interest rate differential or the difference between the yen and the dollar with the high rates, yen with the lower rates, will put pressure on the yen. It will likely keep getting weaker, and it would also put pressure on the BOJ to intervene. So it is unlikely, but yes, the main focus is on the dollar. And in terms of the dollar, Monday it's a tech driven market. There's not much on Monday. Tuesday we've got PPI, so this could give us indication to CPI, which is the main focus for this week, because last week we had NFP and it came in at 256k, which is way past the 160k expectation, and this on alongside a lower unemployment, it suggests a strong labor market, and that is a strong dollar. Obviously that's why we saw Dixie strengthen, but also yields go higher, because a strong labor market means higher rates in the future, or less urgency to cut rates and less likelihood. And if the labor market keeps strengthening the way it is, then potentially even hikes in the future. And what both those scenarios mean is just higher rates than what there's going to be. So it increases the appeal of the dollar. So with that strong labor market, now the focus is on inflation, and we've got CPI on Wednesday. So PPI will give us early indication, because this is just for producers, and this if producers have high inflation, then that goes on to the consumers. So this can kind of give you early insight into the CPI, which is on Wednesday. So if we have a higher inflation, so hotter inflation, then it will actually, I think, lead to a stronger dollar, because of what I just explained, a higher interest rates overall. And a higher interest rates, it increases the appeal of the dollar because it offers better return. But also gold will go up, because gold is an inflation hedge, and if inflation is high, then the price of gold also goes up as well. If it does come lower than expectations, so the main focus for me will be on CPI for month over month and year over year, and the bigger the discrepancy, the bigger the reaction on the market. But a cooling CPI will lead to temporary weakness, because if inflation is under control, Fed are going to cut the rates. It's going to be more of a dovish stance, and that will reduce the appeal of the dollar. And if inflation's under control, then gold goes down as well. So that is the main focus for the week. And then we also have retail sales on Thursday, and apart from that, not much. So main focus is on Wednesday, Monday tech driven market, and Friday, if there's alignment, then there's good chances of whatever trade there is to work.